Hi everyone, this is Vijay Raj from VJR Advisory Group. Today's topic is TDS. What do you mean by TDS? The full form of TDS is tax deducted at source. It is nothing but an income tax. Logically, it is an income tax which is deducted and paid to the government in advance. I'll give an example. Let's say you work for a company. The employer will deduct every month from your salary some amount as a tax, that is nothing but a TDS, and deposit it to the government. Where it will go? It will go and sit in your income tax account, which is if you had given your PAN number, they will deposit into your PAN number, which will go and sit in your PAN card account, like a passbook, like a bank account, you say. So you can use it at the end of the year when you go and file your income tax return. You can adjust your TDS against tax payable amount. This is what it is. It is a income tax you're paying in advance. Why this has to be deducted in advance? Why we cannot pay at the time of year end ITR time, income tax return time? So why? Because the government believes that many people will not pay tax, honestly or whatever. So that is why this has been taken in advance from the your source of income. That is why it is called as a tax deducted at your source, from your source, and keep it in government account. And when you're supposed to pay tax, you adjust with your liability and get, if there is any refund or if there is any additional liability is there, that has to be paid. And if there is a refund, you will get the refund. And there is a myth, like many people come and say, there is a certain amount of TDS has been deducted, which is in my this account, and can we get the refund fully or something like that. See, please understand, it is a tax on your income. You supposed to pay some tax on your, let's say for example, you have 10 lakhs of income. Example sake, I'll take some rough figure. 1,20,000 is your tax liability would have been come for 10 lakh. So let's say already your employer had been deducted 90,000 as a TDS. So then 1,20,000 minus 90,000 at the time of income tax return filing, you have to pay, still have to pay 30,000. Okay, that is how it is. Otherwise, other way, let's say employer had been deducted on some calculation 1,20,000, since you had not given few deductions or whatever, your ATC deduction or your ATD deduction, whatever you had not given a details. That is why they would have deducted more. Let's say 1,20,000 they had already deducted, but your tax liability had come 90,000. Then you get the refund of 30,000. It is not that 1,20,000 completely deposited, 1,20,000 you get completely into your account back. It is not like that. You will have the tax liability for an income you earned. For that, you have to pay tax either through at the time of ITR return you pay fully, or you adjust the TDS balance you pay. That is how it is. So that is the one thing. So this is how the government collect the tax in advance from your account, your source, and that has to be, and at the year end it will be adjusted at your tax liability. That is what TDS is. Thank you.